NBFC space in general has been going through a rough patch over the last 1 month. The problem began when the crisis at IL&FS first surfaced. Over the last few weeks, the government and the RBI have been announcing various measures to allay investor concerns. I have with me Ravi Krishnan, my colleague. So, Ravi, tell us what are some of the policy measures that the government and the RBI have undertaken over the last few days, and what kind of effect is it having?
See, the most recent measure which they undertook on Friday was, they eased some norms which will allow banks to lend a little bit more to NBFCs which are not in the infrastructure space. So, but it remains to be seen how much of an effect that is going to have to ease the liquidity crunch which NBFCs are facing, because remember that not many banks have A, the appetite, and B, the capability also to lend to NBFCs.
So, what is the larger impact of this going to be? So, suppose banks and mutual funds are unwilling to lend to NBFCs. So, then how do things play out?
Well, see, the key fear is that, this will kind of hobble credit growth, right? See, in the last 4 to 5 years, NBFCs have become a very significant source of credit, for the economy at large, because many of these public sector banks, have not been doing that well. There are areas where they are reluctant to lend. So, this is a space which NBFCs have captured. Now, when NBFCs are facing a funding constraint, then there is a good chance that, credit growth will suffer, and that will impact economic growth at large. The second point here is that, when NBFCs are facing this kind of credit crunch, so right now it is a liability side problem, but that can very well become an asset side problem. It can become a solvency crisis over some time.
So, NBFCs also, if you see, they've had a very good run in the stock market. The market was willing to give it a very high valuation. So, the immediate impact, if I understand, is that the margins would come under severe pressure.
Margins would come under pressure. They won't be able to grow at such a pace, because many NBFCs, they have been growing at quite a fast pace, doubling in 3 years, 4 years, credit revenue, so on. So that is not going to happen. And but remember, this is not going to be affected just to the NBFC sector, right? Because if credit growth is constrained, I mean, look at it this way: the economy is running on only one engine now, which is consumption, right? And if credit growth is constrained, there is a good chance that consumption might also come down a little bit, and therefore economic growth could come down. The second point here is that, which a reiteration of what I said earlier. Take the commercial real estate sector, for example. If they don't get enough, credit from the NBFC space, so that could lead to problems for them, and then that could lead to defaults possibly, so which will create a larger systemic problem.
So, Ravi, many are actually comparing it to India's own version of the global financial crisis that we had seen in 2008. So, is there a reason to be really concerned?
See, there is a reason to be concerned, but I would think it's a bit of an exaggeration to call it India's Lehman crisis, this whole NBFC thing. Of course, IL&FS is a big problem, and we are not really sure the extent to which other entities have exposure to IL&FS, but I would rather wait and watch before calling it a Lehman moment, because as of now it seems well under the it seems RBI and government have a grasp of it. But the key thing is that over the next 2 months we have around 1.5 lakh crore of redemptions, or NBFCs will have to roll over their debt. If they are not able to do that, that is when the panic button has to be pressed.
So, thank you for sharing all those insights with our viewers, Ravi. That's all that we have for now. Basically, the NBFC sector is still not out of the woods. You can expect more policy announcements in the days to come.